Hello and welcome to another episode of the Paperstac podcast. My name is Brett Brickey and this is Rick Allen.
That's me.
And we are here for another one today.
It's been a while.
It's been a while. We had some stats stocked up, and I think I missed a week because I forgot to put the last one out. So I thought it was out.
Yeah. He asked me, "Hey, did we talk about this?" I go, "Yeah, we talked about it like last time." He's like, "I don't think we did."
Yeah, we did. I forgot to put that one out, but it'll come out maybe after this one. So some other things that are happening on the Paperstac platform that are really cool. What is some of the new things that just came out? That's coming out. It should be out now when you're watching this.
Notifications.
Hell yeah! So finally.
What does that mean? Well, you probably get a pile of emails.
Sorry about that.
Yes. Well, we've made it to where you can select what you're going to be notified for. So. Really cool. I looked at it today. It's probably a long time overdue, but nevertheless, we're doing it now. So that's good. NoClosings.com we're on the doorstep of that one coming out.
Homepage is being designed, writing the copy, putting it in the code.
Just so you know, that's like the last thing that normally happens is like the homepage design. All the back end stuff is what.
Just taking a while.
That's where all the.
The heavy lifting
comes. The front is just, that's easy.
Yeah, it's pretty easy. We just need the words and we're done. So that hopefully will be.
That's exciting.
Yeah, it'll be good. It's a whole new product. Explain a little bit about no closings for the people that don't know.
So if you've been on Paperstac and you've gone through a transaction, or if you haven't been on Paperstac and you want to see what all we do, you can go to pstac.co/demo. That's tac.co/demo, and that'll give you a demo of the platform. So basically, if you're on Paperstac, you've either seen an asset in our marketplace and are trying to buy it, or you're selling something in the marketplace. And you can use Paperstac to negotiate, communicate, and then we facilitate the closing process by generating documents, paying for shipping. We have escrow and audit baked into it. Well, people have come to us and they've said, "Listen, I've got this note that I'm going to sell, and I've already got the buyer. I just want to use your closing process, and I don't want to pay the 2% fee." So we decided to make it to where if you've already got your buyer, or your counterparty, or you're the buyer and you've already got a seller, you can go ahead and use our closing process for a fraction of the cost. Does everything. It's gonna, and you're right now, No Closings will be using the newest.
It's cool. It's actually some of the stuff I've seen in there. It's all the things that have happened on Paperstac where we said, "Oh yeah, we need to work that in." It's all this. Mike has this just treasure trove of stuff like that in the back of his head, and when he gets to something and when he's doing the new code, he throws it in there. One of the most important ones I think is really cool is that you can invite guests. Yeah. So if you have a lawyer that needs to review something, if you have a custodian that needs to review something, you just send them an email and they can be a part of the transaction and leave comments, but they can't take actions on signing stuff.
Or if you're brokering a loan and you're the seller, you're selling it and brokering it for somebody else, you can invite them to the transaction as well. So.
Or if you're the broker, you can have the buyer and the seller, and you can invite both of them and sit there right in the middle and watch to make sure you don't get cut out. There's a lot of things you'll be able to do with it. It's going to be really interesting.
Escrow and audit, still there. Actually, escrow and collateral verification is what it's called. It's still there.
Yeah. So besides that's everything. So that's that, and we're getting ready to go to Note Expo. If you have not gotten your tickets yet, you can definitely still buy them.
It's not too late. It's right. We're under 30 days. It's November 4th and 5th, Dallas, Texas. Where is it? Is it the Hilton?
It's the same place.
So, yeah, same place it was last year. Mm-hmm. So right by the airport, super easy, DFW, easy in, easy out. Definitely always a good turnout. There was 500 or 600 last year.
Yeah, and that was the first year after COVID. So it was. I'm assuming this year's even going to be bigger. So.
Yeah, always a lot of fun. Last year, if you were there and you didn't see Brett and I night one, we were down in the lounge, the bar.
That was fun.
We had a good time that night. We closed the place down. So
that was a good time.
But Brett's flying solo this year. So
gotta come by the booth and say hello.
I will be there. Yes, come. Take Brett out on the dance floor, make him cut a rug or something.
So today what we're going to be talking about is something I've heard a couple times from new buyers or people that are looking to make the jump from, say, I'm investing in the the stock market to want to invest in notes, they're wanting to know how safe is this as an investment? Is it, if you can give a comparable of, is it safer than the stock market? Is it safer than real estate? Is it safer than crypto? Is it safer than gold and silver? I guess it's the diversification, but what we're trying to figure out is not if it's safer than either or, it's just how safe is it as an investment class? And that's what I'm trying to figure out with Rick. So I'm going to pose a question to Rick. Rick, are mortgage notes a safe investment?
Oof, boy, that one's loaded. It is a loaded question. Sure, they can be a safe investment or they can be a risky investment. It really, it all depends on how you buy it up front, the due diligence, and, what's the underlying collateral. Anytime you're doing an investment, the underlying collateral is what's important, because if things go bad, you want to know what's securing it.
Right.
Let's just look at it and assume that all things are good with the house. Right? Say we've got a good piece of property, it's worth more than what I'm paying for the note.
Mm-hmm.
What are some of the other things that go ahead and make that a safe investment? Well, one is insurance.
Which type?
Both. Not forced place. You've got presumably if you're buying like a mortgage note that's been a mortgage, not a contract for deed, but a mortgage. It'll have a title policy. So it'll have a lender's policy. So you've got some insurance there against collateral going from the date the loan was originated going backwards. Now you're obviously going to want to run your due diligence, pull title reports just to make sure nothing has happened from the origination date till then. Mm-hmm. But you've got some, you do have a form of insurance in the title policy. The next thing you have is the hazard policy. If it's a performing loan, the hazard policy should be intact. And that is there to protect in case natural disaster happens, in case Hurricane Ian blows through and levels houses.
Right. Explain what a hazard policy is and who holds the hazard policy.
We mean who holds it, who gets it?
Is it the lender, the note owner, or is it the servicer, or is it some other party?
There's one of two ways. One, if it's escrowed, then the servicer will generally pay for it. Well, they will pay for it if it's in escrow. So that means that the borrower, in addition to their principal and interest payment, is making an additional payment each month, which covers the cost of insurance on that property.
Gotcha.
Right? The other option is it's not escrowed, in which case the borrower it's up to the borrower to keep that paid every year.
The hazard insurance?
Yeah. Ooh. Now, on that policy, the borrower will be the insured either way, but there'll be an additional insured, which is the lender.
Right. And if something, let's just say the house was leveled, do they pay out what was left in the UPB, or how does that work?
They'll get money to either repair it, or they'll have to pay off the underlying lien first, and then whatever's left over, if they're not going to repair it, if it's like, some of the stuff that went down in, Panama City Beach, some of those houses were completely lifted off their foundation and floated away or were tossed, just those are going to be ground up builds. So the insurance company would presumably pay that.
So they pay off whatever's owed currently to the lender.
If they're not going to be doing any building, then they'll pay off what was owed.
And that goes to the lender, which would be you or somebody, and then whatever's left over after the fact goes to the borrower to maybe start over.
Correct.
Oh, okay. All right. Not to deviate too far from all this, but I just wanted to let people know what a hazard policy is.
I digress. The insurance is basically the key there, right?
Right.
So you've got two different kinds of insurance. What else is nice about it is that it's not toilets and sinks. You're not getting phone calls from tenants. Presumably you're going to have a servicer, so you're not going to get phone calls from borrowers. And so they can be very secure. Where they can get risky is the smaller balance stuff. If it's small balance and it goes non-performing, right? If you've got a small balance loan and maybe the loan is the principal balance is $20,000 and you're in it for $15,000, and maybe the house is worth $35,000. Well, there's equity there,
right?
But if something happens and there's issues, you have to foreclose and there's issues with the foundation, or somebody strips the copper, or somebody takes away the AC unit, or the basement floods, right? Mm-hmm. If any one of those things happen, there's not a lot of meat on the bone to protect you.
Right, because I mean, if the value is only worth, it's only worth 35.
Yeah.
Wow.
Yeah. So if two of those things happen, if somebody rips out all your wiring and copper and your AC is gone, well, you're pretty close to 15 grand or somewhere in that neighborhood right there, right?
Jeez, yeah.
So that's where it's a little more risky. That's where it can be risky. You don't typically get to go inside the house and look around and touch it and see what's the condition. You can do drive-bys.
Right.
But that's it. You can have photos taken, but you're not going to go inside the house most of the time.
No.
So that's it. That there is a little risk factor there.
What's your opinion on? So we, for the first time ever on Paperstac, land notes have outperformed. There's more listed land notes than there are mortgage notes. So I guess that marketing push about a year ago for the land notes is working.
Paying off, yeah.
So, but with that said, I see a lot of them come on the platform. Guys loaded up 16 yesterday, and he's already in 2 closings. So, but they're good notes. I'm like, look, these are all 12%, 5-year terms, 10, whatever. There's one's for 4,000 because that's one, but he's got one for like 80. So, but like, there's a big range. But like, you got it in there, and just like I'm like, what's there to evaluate? It's just the land.
Well, if it's just the dirt, it's the dirt, right? They're not making more dirt. I can tell you that much. The land is there, and so I know this is huge in Oklahoma, Arizona, Texas. There's some other ones out there where you're buying large tracts and cutting it up and selling it. And the nice thing about it is usually what I like about land is if you're doing it, you're not having to worry about an insurance policy if it's just dirt, right? Because it's just dirt. Wind can blow, rain can come. It's just whatever. There's nothing that's really gonna to wreck it, and nor can you really get a huge policy on it. But then usually the borrowers who are getting these loans on the land, usually they start doing improvements. So they start putting septic systems in, houses on there, double wides on there, stuff like that. And so they're motivated. Most of the time, they pay in cash. They're usually fairly good borrowers.
Yeah.
And I know in states like Arizona and Texas, the process of getting something back is extremely quick.
Right. Yeah, that's true. And I would imagine a lot of times some of the stuff I've seen, these land notes are usually like somebody might live somewhere and they're buying this land as like their whatever vacation spot. So
sometimes, but other times it's just literally especially in Texas and South Texas, you get a lot of migrant workers who are coming in and they're not bankable. They've got 15, 20 grand cash to put down. They're making money.
Right.
And that's fine. And they may have 2 families living there.
We have a lot of those on the site. There was a guy that, he sold, I haven't seen him in a while, but he sold a whole bunch on our site.
Charlie?
Charlie.
He's still down in Brazil.
He's stuck in Brazil with he's stuck with the eucalyptus farm. That's an interesting story. Okay, so cool. So the land is, maybe a little bit more secure, or not secure. Is that a better entry loan? What would you say? Like, if you're in terms of safe, if someone's sitting there on the sidelines going, okay, he convinced me as long as something terrible doesn't happen, I need some wiggle room if that's the case, but it sounds like they're safe.
A lot has to do with your counterparty. What kind of documentation are they doing up front? Are they just selling it to anybody that can fog a mirror? If that's the case, not a great idea. You want to know that there's been some underwriting done.
Right.
I wouldn't just go buy it from anybody, but there's people out there who, I talked to a guy yesterday, he's done about 400 of these things, and he's got 0 defaults.
That's crazy.
Yeah, it's if you underwrite them right, you take enough money up front. Now it's almost unheard of because if you're in the business for a given amount of time, I don't care how good you underwrite somebody, life happens, right? Mm-hmm. Someone dies, someone gets sick, someone loses a job. It's just going to happen. So, but if you've got even if you've had 10 or 20 out of those, you're still doing pretty good out of 400.
Right, okay.
So, you just want to make sure you have a good counterparty. They're underwriting it correctly. And that's really it, whether it's land notes, whether it's, regular mortgage notes. You just want to run your due diligence. Be comfortable with it. Don't just take the word for it of payment history, or that somebody said this performing. Look at payment history. We had somebody call today. I talked to somebody we sold a loan to, and they were like, "You said it was performing." I'm like, "Well, no, I said it was. You bought it in August, and I said they hadn't made a payment since June, but they were due for April. So that's it's a semi-performing loan,
Right.
So I mean."
The good thing is, and this has happened once in the past, two different scenarios where someone has bought a note on Paperstac, and so people are just not comfortable with the non-performing the process. They don't want to do it. So, one guy he bought it and he kept it for about a year and a half, and became non-performing. He reached out to us and he's like, "What should I do?" I was like, "Throw it on the site, just see what happens." And he sold it.
Yeah.
He sold it for almost like dude, he did pretty well with that. And another guy, he bought a land note. And immediately, afterwards, something happened to the people, and they basically did it a deed in lieu. They couldn't do it. Something happened, but it was like a second property, and they just said, "Look, we're walking away here. Take it." And so he got the land. He's like, "What should I do?" I was like, "Turn around. Here's some land listing sites. Throw it on there. Seller finance it, season it, and bring it back to Paperstac."
I've done it. I've bought stuff and it's gone non-performing, or it never made a payment to me, and. You try to get them paying, and you turn around and sell it again, and just say, all right, sell it and get out of there. Nice thing is, the market's changed quite a bit from when I started. There wasn't really a Paperstac. There was kind of FCI Exchange, but it wasn't as what Paperstac is.
Right. The good thing, there's over 12,000 people on the site.
Yeah. So
and somebody's got an appetite for what you got.
There's a market out there for the assets. So one man's trash is another man's treasure. If you've got something that's non-performing and you want to get rid of it, just put it on the platform. Somebody wants to buy it.
Yeah. So some guy today in New York, he's like, "I got a non-performing in upstate New York." I was like, "Yeah, dude, imagine we have people that want non-performing stuff in New York." I'm like, "You guys are thick-skinned or something. They just know something I don't, because I'm like, that's just a different ball of wax." But okay, so we kind of proved that it's a safe and pretty semi-safe investment.
It's a safe investment, but it's just like anything, right? It's an investment. You're investing, whether you're investing in real estate, whether you're investing in the stock market, whether you're investing in mortgage notes, whether you're investing in businesses or companies, or
there's always a chance.
There's always a chance that things can go bad, but it's all about mitigating risk. What things are set up there to minimize risk?
Right. I mean, there are some other things too. If you were sitting on the sidelines and you're saying maybe a single asset's not your cup of tea, there are funds out there.
Right.
We have a list of them.
Yeah, invest in a fund that'll take your money and they'll buy hundreds of loans.
Right.
And that way,
the risk.
Yeah, your risk is spread amongst other things. But here's the thing: is if you're coming to the platform or you're going to buy your note, you're like, look, I want something worth $200,000 or more. I want the borrower to have a 780 credit score, and I want there to be equity in the property, and I want 6 years of seasoning on payment history. Don't expect to get a 10, 12, 14% return.
Right.
Why?
Because that one's going to be about par.
But because that one, if you were getting 5 or 6, what's the risk on that thing? If the borrower's got a 780 credit score, there's $60,000, $70,000 in equity, 6 years of good payment history, the value of the assets over $200,000. Well, I mean, you're kind of like knocking out all the risk factors, right? You're just like, man, that is a really secure set it and forget it loan.
Mm-hmm.
If it's not a very risky investment, it's normally not going to give you a double-digit return. You'd be happy with your 6 or 7 and move on. If you got a 6 or a 7 out of that, you'd be real happy, because it's a super secure loan.
Right.
And there's probably a good chance that person's going to pay off. Now, on the other hand, if you've got a spotty payer, you've got a lower balance one, they don't have very good credit, you're going to have to look at, okay, well, I'm looking for, low teens, mid-teens, 14, 15, it all depends. And you can do that when you start buying those, those more riskier. The riskier the investment, the better. If it's riskier, you should be looking for a better return.
Interesting. Okay, so safe. How the degree of safety determines your view, pretty much.
It's not a hard rule, but for the most part, if it's a super safe investment,
Yeah, I mean that makes total sense.
Let's put it this way: if you got a super safe investment and you're like, I want it at a 12, I'll show you 5 people who will take it at a 6.
Yeah?
Yeah, because it's like, look, I know that's safe, it's secure. I'm gonna put my money there. Is it getting me 10? No, but it's getting me 6 or 7. I'm good with that, and it's backed by real estate. So you know what I mean?
Yeah.
So it all has to come down to risk. The riskier the investment, the higher the yield.
Interesting. That's a nice slogan. Riskier the investment, the higher the yield.
That's right.
Okay, well, good stuff. I think you answered all the questions for today. Of course, again, if you have your own questions, reach out to support, hello@Paperstac, and I'll ask the questions and let him do the answering, and, so that's pretty much it.
All right.
See you on the next one.
See ya.
See ya.